he traded GameStop during the first meme craze, but welcome, Michael. You have a different strategy this time around. What is it?
Yeah, thanks for having me. I think the strategy will be a little different this go around. I think there is some different headwinds we're going to have for these particular meme names. Basically, the crux of it is that the original short squeeze, especially with GameStop, happened with this anomaly where there was more shares borrowed than initially existed in the market. So you were short about 125% of the entire float. This time you're only short 20% of the float. And I think that's one of the reasons we're seeing this fade from all-time highs. However, as you noted yourself on the intro, a lot of other short names are starting to move as well. I don't know if this is short companies or short funds getting nervous that this might be meme stock 2.0 and covering, but I'm zooming out and looking elsewhere to see if there are other names, especially short float names, that may actually get an advantage based off this move that we're seeing in GameStop.
Obviously, this is not a recent video. You'll notice that the share price that was cited in the stock ticker window came in at roughly $46 per share. Obviously, GameStop is nowhere near that point. The reason that I'm showing this video is because I thought that it would be interesting to go back in time a little bit here and look at some of the underlying rationale that originally centered around this revival of the meme stock trade, so that we can really see how this actually played out. This is a short video, so I'll just play the rest of the video.
How do you short more shares than there are?
There was a lot of speculation to why. I think the one thing that everyone agrees on is the reporting for shorts is a little bit archaic. You know, we're in 2024, and currently it's every 2 weeks the actual data is compiled and put on a ledger somewhere. I think the speculation was that, you know, somebody shorts some share in one broker, and then the lag happens that, you know, that gets borrowed to another broker. And because the data is not being reported instantly, and we have this T+3 or T+0 or T+1 delay, depending on what you're trading, that lag is allowing people to short more than exists. So, you know, if we're going to correct that, and I haven't seen much movement in that fact, I think we need to get to not only shorter settlement, but we need to also get to a point where shorts are reported almost in real time.
I thought there was maybe some effort to do that. It is urgent now as it ever was, and you'd think the technology certainly exists.
This is a meme stock trader. This is a person that is looking for short squeeze opportunities in the market. Final part of this conversation here is going to center on is the fact that meme stock traders entered into these positions without an exit strategy, without a true game plan to sort of know what was going to be happening with these positions if the market worked in the wrong direction, if the short squeeze never happened, or if no major rallies ever materialized. There were a large portion of the people that got into these positions did so after these initial spikes here in the share price. This is where all of the excitement really started to generate in the market. I mean, sure, of course, there was some that preceded this, but a much smaller percentage of people were interested in these stocks prior to this move higher. The vast majority of this interest started to come at the exact wrong time. And why did that happen? It was largely due to people like Roaring Kitty getting people excited about things. After the fact, after the short squeeze had already happened. And I obviously, I don't need to name names here. I think everybody knows who I'm talking about when I say that there is a set of YouTubers, people on YouTube that continue to sort of propel this notion or this argument that another short squeeze is coming and that it's imminent, and if you just click this video, the short squeeze will be happening tomorrow. Make sure you watch this video, because if you don't, you're going to miss out. Constantly running people through this hamster wheel, of an event that never occurs. So we're almost at the end of this clip here. I'll just play the rest of it, because now comes the discussion about the fact that exit strategies really seem to be missing from these trades, and that's a critical portion of any financial investment.
So, Michael, what
Yes.
should traders do this time around? Maybe people got burned the first time around, holding shares that are now, they thought, more like worthless, and maybe they get a second chance. Just talk to us about some different strategies here.
Yeah, absolutely. I think you need an exit plan. I think if you're in from the original squeeze or you're getting involved in this squeeze, we wish you all the best, but there's a large chance that things aren't going to, they may happen faster than this time, which is some sort of revision to the mean. So I just implore people to have some type of a plan to say, I am going to get out of my position when X occurs. Whatever you decide that is, I think that's something that you need to focus on, because there was a lot of people who didn't have an exit plan last time, and some of the stocks are coming back right now. A lot of them did not. I'm thinking Bed Bath & Beyond, for example, was part of this first meme stock mania. So have an exit plan. Understand that, chasing these moves probably isn't the best idea either. Buying these stocks when they're up 130, 40%. What we're doing a lot at Trade Ideas is looking at the entire market of heavily short float names and saying, is there anything that hasn't moved yet? Because if you remember the first meme stock mania and the first short squeeze, there was GameStop that moved initially, and then AMC moved after that, and then we had BlackBerry. What happened is traders jumped from heavily shorted name to heavily shorted name to heavily shorted name. So if we are going to see that same thing repeat and the same continuation again, what we're really trying to focus on is what could potentially be the next one that they jump to, and then also what companies look okay and are maybe doing a little bit better financially or doing a little bit better when it comes to market trends than a GameStop or an AMC that could take advantage in the long run of these short squeezes if they happen.
The second short squeeze was much smaller in size than the first short squeeze. And not only that, the sort of ripple effects during the second short squeeze were much smaller than what happened the first time. So my main question is this: for everybody that has held these positions for years now, for long periods of time, I do think that people should be asking themselves, one, how long have you held this position? Two, what other stocks could you have been investing in during this period of time that would have allowed you to actually gain some money rather than holding on to a dead stock that went absolutely nowhere? And then three, finally, how much money have you actually lost in this trade? If we did, for example, see a third spike here, would it then be smaller? Would history just continue in this way? These are the real questions that need to be asked. And it's important because it is very clear at this point that most of the people that got into the stock did not have an exit strategy, did have no plan for what to do if the stock didn't move in the direction that you wanted it to move. So now many people are stuck in these positions and have nowhere to go with losing trades that may not go anywhere at any point in the future. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.